It's part of this new conspicuous consumption culture, right? So we glorify billionaires and we want to watch them. We want to watch the Kardashians. We want to see the car that they drive. Or turn on TikTok and the first thing I see is, as a reel about, a car. Someone, hey, you've got a great car. Well, what do you do for a living, right? And it's an interesting culture, but I find I'm not that lucky. I find my success comes from very hard work. And every time I try to get lucky, I get reminded that, Justin, you're not lucky. Work hard. That's what you're good at. Welcome to Above the Legal Limit. I'm your host, Justin Chopin, business owner, lawyer, dad, world's best husband, traveler, and adventure seeker. On this podcast, we mix business with pleasure. We'll dive into growth strategies, entrepreneurial adventures, the business of law, and prove that business isn't boring. So let's get ready because we are going above the legal limit. I have a very special guest here today, Rufus Cressend with Waterfront Wealth Management. Thank you for joining us.
My pleasure.
So why don't tell me a little bit about your practice, sir?
About my practice. So I've been in practice for 26 years. I am a certified financial planner. And our job is to help our clients navigate every critical financial event in their lives, both the things that they plan for, but also the things that they pray never happen. So it's my job is helping people make smart decisions about their money.
Fair enough. So I help people on the front end, right, when bad things happen. But once they receive the money, right, so my job's really over. Mm-hmm. There have been many conversations I've had with clients where I've had to say, hey, look, this is a lot of money. Okay, you can't just go to the bank and cash this. And they'll say, well, I don't have an account. I was like, well, the bank will give you an account for free, mm-hmm. right? So if I'm handing you $100,000, Whitney's not going to charge you, to open an account. So put it in a bank account. I had this story. This is actually not my story. So Judge Barbier, who sits on the Eastern District, he always tells this story. He before he was a federal judge, he was a maritime personal injury lawyer, and he helped his client out, gave him this big check. The client went to the bank, and I could be butchering the story, and I could be making this up, but this is the story as I remember it. Went to the bank and cashed the check, in actual cash, and was immedially robbed of the money, and then called him up and said, hey, I just got robbed. And the judge said, well, I can't do anything for you now. I've already given you the money. Why would you cash a check like that? So a lot of times, when we have a big result for a client, we will tell them, hey, look, you need to talk to somebody. You need to talk to a financial advisor. But the words are cheap because I'm as bad as everybody else when it comes to financial management, right? I've got 2 kids in private school. And I think what we ought to be doing is we ought to have a more in-depth conversation where we say, hey, Vic, this is Rufus. He can help you with some of this if you're interested, mm-hmm. But, $1 million is $1 million. And sometimes a bank account's not the best place for that.
Sure. No, I think it's almost irresponsible for you to hand over that check without giving them some type of a guidance of saying, okay, this is a life-changing event. If you're mentally not prepared to make smart decisions, you're going to inherently make bad decisions, and you're going to squander this money. A lot of times it's especially depending on their relationship with money in their past. And as far as are they going to create a new social life? People are going to know that they just inherited a lot of money or they just won a lot of money. And, they're going to be the life of the party for a while. And They're going to create this entourage or this new lifestyle that is not sustainable. And I think that's where you want to have someone say, okay, let's talk about your goals. Let's talk about your family. Let's talk about your relationship with money. Tell me about your earliest memories of money. Tell me about your past. And try to get through to them through their lens and understand where their starting point is versus just the run-of-the-mill financial advisor might say, yeah, sure, you got $1 million. Sure, we have a product for you. Right. It's going to go in here. And it's not going to work because they haven't changed their behaviors. My job is so much more than just managing money. It's about managing expectations and managing behaviors. That's the hardest part of my job. And the way we do it so successfully is through financial planning. And we have to reach this level of empathy that says, okay, I see the world through your eyes. I know where you're coming from. Here's some changes that you're going to have to make. I need to hold you accountable for these things. And empathy is the hardest part of what I do, because imagine most people go home either mentally exhausted or physically exhausted. I go home every day emotionally exhausted. Right. You only have so much give a shits that you can give.
Yes.
And so to be even mustered up, I sit in my driveway and says, all right, my wife and my family, they need my very best. I can't just go in there and say, okay, I'm just emotionally tuned out. So it has a drain, and we all have limited supply of it. So I think the empathy is really key to having a really good relationship with a financial advisor, because you need to rely on them to be your guide, to tell you to do nothing when nothing's the right thing to do, also to weather the storm when the market's inevitably going to go bad, and to basically, again, hold them accountable. Now, empathy is a kind of a dangerous thing too, because it's very easy to have that role reversal with that client. It says, okay, the markets are going down, you've lost a lot of money, I feel your pain, but I still have to have the discipline in my training to say, do nothing because nothing's the right thing to do.
Right.
But also to say, hey, understanding the way you're feeling, this is how you're supposed to feel. Stay the course. Let me remind you about the long-term goal. I did not build you a one-year portfolio. I did not build you a one-week portfolio. Don't worry about these short-term fluctuations. They're not losses. They're just fluctuations. There's a difference. So that's a really important part of being able to say, hey, look, I've never had this kind of money before. If left to my own devices, I will make the worst possible decision at the worst possible times if I try to do this on my own. And that's really where we come in and start changing those behaviors and giving them a target they could see. They've never really had goals that they've written down on paper and actually had a physical plan that they can follow. And a lot of times when we hold them accountable, it's the discipline of taking the human element out of it. We want to remove points of friction by setting up systematic behaviors that they don't have to think about. They don't have to make a choice every month. It's just put this away. You're not going to think about it. Here's your money that's in reserves. Now, it's not always investing. A lot of times it's let's pay off some debts. Right. But if we're going to pay off your debts, let's talk about the behavior that got you into these debts in the first place, because what's going to happen? You're just going to go charge up those debts again.
Exactly.
And that money's going to just eventually go away. And that's why you hear about all these lottery winners that are so miserable and that they're broke within 3 years after winning the lottery. How could that be? Because they didn't change their brain.
It's easy, right? I think about, so I'm like everybody else. As I drive on I-10 and you get to the Poydras exit and I-10 sort of, makes that turn, there's the huge billboard that shows you what the Powerball is and that shows you what the multi-million, whatever, the other one, Mega Millions.
Right.
And you sit there and you think, what if it was me? You're like, what if it was me? And a lot of people are like, oh, I could never handle it. And I would say every time, oh, I'm pretty sure I'd be okay. I'd figure it out. But that's a lot of money. It's hard to lose $1 billion. You can do it. These guys do it, but that's a lot.
Your life is going to change with that much money, obviously, but even it doesn't have to be Mega Millions. It just has to be a couple 100,000 that all of a sudden you just feel rich for the first time in maybe a long time. And everybody's a little bit different. Whether it's inherited money, it's won money, or lawsuit settlement, whatever the case is. We tend to have this mental accounting, and you can go one of three ways. Let's say a loved one dies and you inherit that money. Well, someone will take that money and say, okay, we're going to segment this money. This is sacred money. We're going to make different decisions with this money than we would on the money that we earn and we have in our savings account. And they treat it differently. Okay. And then other people may say, well, no, this is newfound money. This is a windfall. I'm going to go do something that I've always wanted to do and be really irresponsible with it. And they say, because it's not my hard-earned money. Right. Other people say, well, I don't make the distinction. And there is, I just blend it with everything else and I apply it towards my goals. Now, you don't see too many of the third category. And there's not one thing that's wrong, or there's nothing wrong with you if you're any of those type of people. Just to recognize that you're doing that and having someone help you change those behaviors. And I think that's a really key thing when someone gets a big lump sum of money, is that in a lot of cases, this is your one bite at the apple. You don't get another chance to go have your whatever the case was that you helped them solve.
Sure.
So they can't rely on having a lawsuit every 5 years to refill the bucket. Okay.
I would hope not. That bless them if they do. That would be horrible. But no, I agree. And I always put myself in that first category. So in my family, I don't get paid. the same way that maybe a defense lawyer would, where you get like a steady paycheck. So my wife gets a steady paycheck. So we always say she buys the broccoli. So I can buy the house, but she buys the broccoli. And we differentiate, which always really pisses her off. She's like, well, I don't have this secret account that you have, But that is how we do it. But look, I'm as bad as everybody else. I didn't take classes in any of this, right? I went to law school. So I have a psychology degree, and then I was in the workforce for a few years and then went to law school. And, and I came out and I'm a litigator. So what do I know about wealth management? Zero, absolutely zero. I'm the kind of guy who's like, it'd be great. We should go buy Netflix stock. And then Netflix tanks, the next day. So I have a horrible track record of this. And so I would imagine, part of the problem for you and your clients is if you want to build wealth, and I say this without any understanding, but I would imagine discipline is ultimately, the challenge there, right? It's not, you've got to do it incrementally.
Right.
Unless you really truly inherit something or it's a settlement. But if the average person, person who makes, whatever an average salary is, $60,000 a year, if you want to retire, if you want to build wealth, it's done on a weekly, monthly basis, not in lump sums.
Well, let me address the first thing you said, which was, first of all, you're normal. Most people will go.
Tell my wife that.
Well, no, from the standpoint of when you, we see this a lot with our younger investors. First time out of school, they're making some money. First time they have some discretionary income, they say, you know what? They immediately look for shortcuts, and we're human condition also is we're inherently lazy. We want to look for shortcuts, and we look for ways to find the cheapest investments. And then we're going to go do it on our own. We're going to go open up a Schwab account or a Robinhood account or whatever the case might be. And we're going to go ahead and invest this money. Now, the next thing is, all right, I got to pick an investment. So a novice investor will basically say, some variation of this question. What's the best performing stock over the last 12 months? That's what they're looking for. Okay, yeah. And then they'll go and buy Netflix or whatever is producing 100% or 50% and say, hey, I would like to be a part of that.
Right.
And then, of course, the next question is, all right, what's the second best performing investment over the last 12 months? Because I heard somewhere that I need to diversify. Right?
Right.
So what they're doing is they're breaking the rules of investing. The rules of investing are quite easy. It's buy low and sell high. Most people won't take the other side of that argument. We get that. Be diversified. You do have to have different things that have inverse relationships, and then don't make emotional decisions. So the novice investor will go out there and break all three rules at once. Now, I say it's kind of a rite of passage. They almost have to muck it all up themselves before they say, okay, I've lost enough money. I don't want to do this on my own. And the lucky person will get that over with quick, and
right.
it'll be done, and they'll lose the money. I'm like, okay, I tried this, not as easy as I thought it would be. I'm going to go seek help. The unlucky person is the person that gets lucky with their initial investment, and they're like, oh, this is easy, and they start to confuse a bull market with intelligence, right? So they say, oh, well, look, I just bought something that was already up 40%, went up another 30%. Why would I need help with this? This is so easy, and they're in this momentum of buy high and watch it go higher. But inevitably what happens is the prices will come back down to reality, and they'll get really nervous because look at all this, and they don't remember their starting point. They remember the high watermark, right? So they're saying, hey, I once had this amount of dollars, now it's down to this, and fear will drive that emotion that says, okay, I got to get out before I lose it all. And they don't know the difference between a loss and market fluctuations. So that's where I come in and say, do nothing when nothing's the right thing to do. There's a difference between the noise that you're hearing out there in the news versus your long-term goals. So anyway, drop the shame. Everybody does. I did it. I started in 97. So 97 through 2000 was just, remember the dot-com bubble, right? And I'm like, how hard of a job is this? People pay me. I put them in investments that make 40% each year. I'm actually pretty good at this. And I even bought different .com stuff because I didn't know anything either. So I'm chasing those returns. I'm chasing those highs. And, of course, we all were humbled as soon as everything burst. And it's like, wow, you really paid the price. And it's like stretching that rubber band, holding it against your leg. The further you stretch it, you let it go, it's going to pop hard.
Right.
So the further that rubber band stretches, either going to break and you're going to hurt your hand or you're going to hurt your leg. So you have to recognize that, don't confuse intelligence with a bull market, but a lot of people will go through that rite of passage where they have to learn for themselves. I like to say we reject what we're told, we embrace what we discover, right? And we have to learn the hard lessons ourselves, and that's wisdom.
I couldn't agree with you more. I learned all my lessons the hard way, every one of them. And so I had a friend in high school who says, Justin, you can't lose, man. It's a penny stock, and it's amazing. And so my dad, I was young, and so my dad said, all right, here's what we're going to do. We're going to buy 100 shares of this penny stock. And it's a long time ago, so we got like certificates, right? And and we held on to the penny stock, and it is a completely defunct company. And the lesson was, Dad was always like, well, what did you really? We only lost less than $100, right? Or maybe we put $100 worth. Maybe that's what it was. So we lost $100. But it was a $100 lesson that you don't know shit about the market and investing, and there's no such thing as a sure bet. And you need to better yourself and learn, but always know when you need to stay in your own lane too. And this is a lesson that I continue to learn, when I buy the Netflix stock or when I start learning about small cap versus large cap. And then I realize, Justin, you're a lawyer. You need to just be a lawyer and not do these things. I'm like, I forgot about the penny stock, but every now and then, I think what it is, stocks are so vogue now, right? So if you turn on the news, all you're going to hear about is the price of Tesla stock. It's all the people want to talk about.
It's exciting.
It is, right? It's part of this new conspicuous consumption culture, right? So we glorify billionaires, and we want to watch them. We want to watch the Kardashians. We want to see the car that they drive. Or turn on TikTok, and the first thing I see is as a reel about, a car. Hey, you've got a great car. Well, what do you do for a living, right? And it's an interesting culture, but I find I'm not that lucky. I find my success comes from very hard work. And every time I try to get lucky, I get reminded that, Justin, you're not lucky. Work hard. That's what you're good at.
And I don't think there's anything wrong with taking some of the money aside and having some fun with it, and that be your side account. It's the same high that you'll get from going to the casino and winning on blackjack 5 times in a row. So that's fine. But segment that money.
Right.
This is your planning money. We don't take our retirement life savings that our family needs to the casino. We do sound investing. Now, also remember, when people are giving you these stock ideas or they're telling you about their successes, remember, they only talk about their successes. Nobody's bragging about all the money they lost in the other 5 ideas that they lost their ass on.
Right.
So that's the other thing too. Is it's not social currency to say, hey, look how dumb I am.
Right.
It says, no, look how good am I picking the stocks. And I own Tesla. Is this price now? It's on this price, and aren't I smart? So they use that as that currency, and people are like, wow, you made a lot of money. I like the idea of that cryptocurrency. I like the idea of that marijuana stock. I like the idea of that .com, whatever the investment du jour is, right? There's always going to be something that's always grabbing the attention, grabbing the headlines, and that's the human condition as well. And that's where we want, remember I said, I help manage expectations. And that's when people come in and say, hey, Rufus, I need you to take this money and make it worth this much. And if their expectations are just not realistic, I remind them that it's not my job to make you rich. It's my job to keep you from being poor. And that's a very important part and a different perspective. You're doing great with your job. You're in that 1%. It's your job to make yourself rich. You bring your money to me to make sure that, hey, Rufus, make sure I'm never poor.
Right.
Okay. So that's the partnership, and that's the expectations that and if they come to me and for returns, it's going to be the same reason why they leave me. So it's going to be the same reason why they leave the next person too. So my returns are going to be adequate. They're going to be fine. They're just as good as anybody else. Have access to the same thing that everybody else has. What makes us different and what makes it successful is that you have the partnership of us in helping you and doing the things behind the scenes. And like you said, you're staying in your lane. You're saying, use the doctor analogy. It says, okay, I need surgery. I guess I could read a couple books and buy some scalpels and maybe perform surgery on myself, but that's kind of ludicrous. Why would I do that?
Right.
I might as well spend the money and have someone that, this is my life we're talking about, so spend the money on someone that's went to school for that, has the expertise, has performed that thousands and thousands of times, and has a success ratio that I can stand behind and feel confident about. Or I can just, I guess, I can save a few bucks and do it on my own. I just would never do that, but we do it all the time with our money. And
Sure.
I think just stay in your lane is very important. Even with attorneys, with CPAs, I'll even say, so like, I promise not to give legal advice. You stop giving my clients financial advice. And I say it in the most fun, joking way that I can, but I'm very serious. And when it comes to even tax advice, I'll say, here's some great strategies. I can take you only so far, and I know these things will work. However, I still want you to talk to your tax professional to see if we have asked all the right questions. In most of the cases we have, but sometimes there's something they know from their insight and from their lane and their expertise. They can say, hey, Rufus, great idea, but it doesn't work for them, for this client, because this, and this.
Right.
And then the same thing with attorneys. I can say, hey, this is the kind of trust that you should have. This is the type of will, the power of attorney. Here's all the other documents you had. But I'm not going to do those documents. We're going to bring in an attorney that specializes in this, because I want to make sure we're asking all the right questions. I think wisdom is really about that, too. It's not about always knowing all the answers. It's about knowing to ask the right questions, but also knowing
what you
the
don't know.
limits of your capabilities.
I think Socrates said that, right? It's you knowing what you don't know. Look, I have to give the same advice to my clients. I am not a tax attorney, okay? I got a B+ in income tax. I took one income tax class in law school. I had no idea what the hell he was talking about. I still don't know what he's talking about. And if you ask me the difference between above the line to deduction and below the line to deduction, I can give you a bullshit answer that's going to sound like I know what I'm talking about. I have no idea what that is. I saw my old law school professor in because he actually rents the space next to me, oddly enough. And I told him that the other day. I still don't know what it means. And he laughed and probably shook his head and walked away. But it's the truth. I can't give you tax advice. I sure as hell can't give you financial advice. All I can do is tell you the best advice, is to get good advice. And I'm a big believer in, the wisest people I know are the ones who are self-aware enough to say, this is not my area of expertise. This is not something I know about.
I think it's a confidence builder for the people that we even work for, our clients, for you to have the wherewithal and the competency and the confidence to say, I don't know. Most people will try to fake it, right? Or they'll try to give them some bullshit answer, some jargon. But if I'm asked a question, I get asked questions all the time about this stock and that stock. I'm like, I don't know.
Right.
I have no idea. I don't sit in front of a computer all day long. I have people that work for me that I just hit their extension. They'll tell me everything I need to know, and I'll give you my opinion based on what they just told me, because I pay them to do that. But I don't know. It's you're a financial advisor. You're in this social setting. Oh, tell me about this stock. That I'm like,
right.
Yeah, sounds like a good idea.
How many stocks are there?
I have no idea. So I've heard good things. But yeah, well, you have to come in and we'll talk, and I'll put you in front of my analyst if you really want to know. But I don't know. I can say very confidently, because what I do know, I can also say confidently.
Fair enough.
Anyway.
Well, hey, thanks so much, Rufus, for coming on the show. I really appreciate it. Rufus Cressend at Waterfront Wealth Management. Thanks for giving us your wisdom. And we may be calling you, because I might probably need another business card or two. We do have this issue come up a lot with clients where they do get a windfall. I shouldn't say windfall. That's the wrong word. Where they receive a large compensation for the injuries that either they or a loved one have received.
And that's what I do, is just help people make smart decisions. And sometimes that smart decision is not to invest it with me. And I'm honest enough with people to tell them that you should do this, and this. And none of those things involve coming to me. And sometimes even a structured settlement might make more sense for the certain type of people that we're dealing with. And that's what I'm very, very happy to at least have those conversations with no expectations of them hiring me. But if it's something I can do to help one of your clients, at least make smart decisions and point in the right direction and say, this is the type of help that you probably do need help. If it's beyond the scope of what I can do, I'm happy to do it.
I love it. Well, look, they're saying we're out of time, but I got a question.
Yeah.
All right. Do you take the lump sum, or do you take the annuity?
It depends. I think the annuity can make sense if they're not going to work with someone like me, because what did I say? You want to remove areas of friction. It's you now have the built-in discipline to where you cannot make a catastrophic decision all at one time.
But you could still probably leverage your future receivables on the
You
annuity.
could, and you go sell it for
There is always a way to
pennies on the
screw it up,
dollar,
right?
But at least you've removed some element of friction there. I think the lump sum, we can weigh that out and say, okay, what are your goals? Do you have money that you want to leave to your children? Because a lot of times this annuity is only for a set period of time or for your lifetime only. And that's where we need to really take in all the data and say, okay, here are the pros and here are the cons. Usually there's not a wrong answer. It's just time will tell what the better answer was. But as long as we're making an informed and confident decision, and that's what we want to get you to, is a confident decision that says, okay, I've asked all the right questions and annuity makes sense, or hiring an advisor makes sense, or paying off my debt makes sense, or a combination of all these things.
I like it. I like the answer. Yeah, it's a good point. You could be 80 years old and the annuity makes no sense at all. You could be 20 and a lump sum's nuts. I love it. Well, thanks so much for coming on. I appreciate it. Thank you for all your words of wisdom.
My pleasure. Take care.
Thank you for joining me today on Above the Legal Limit. If you enjoyed the show and you want to hear more about business and law, hit that subscribe button. If you didn't like the show, keep it to yourself. Remember, there's no limit to what we can achieve. We will see you next week. Until then, even though we're above the legal limit, let's drive safely. Cheers, everyone.